listening to Turning Hard Times into Good Times with your host, Jay Taylor. If you have a question or comment about today's show, Jay would love to hear from you at 1-866-472-5790. That's 1-866-472-5790. You can also send an email to questionsfortaylor@gmail.com. That's questions, the number 4, Taylor@gmail.com. Now, back to our program.
Welcome to this special segment of Turning Hard Times into Good Times. I am your host, Jay Taylor. Today is Monday, April 4th, 2016. Today I have Robert Giustra, the President and CEO of Columbus Gold, with me to talk about the announcement that Columbus Gold made on March 28th that it has informed Eastmain Resources of its intention to nominate 5 new directors to Eastmain's board at Eastmain's annual and special meeting of shareholders to be held on the 25th of April. Columbus Gold, which owns about 1.9% of the shares of Eastmain, believes that the current management has fallen short of its duty to maximize shareholder wealth, and it maintains that there are several other shareholders who share those same concerns. Both Columbus Gold and Eastmain Resources are recommendations in my own newsletter, and I personally own shares in both companies. But my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, covers them, so I am not at this point in time taking sides on this dispute, and so I will be interviewing Donald Robinson, the President and CEO of Eastmain, after I conclude my discussion with Mr. Giustra. Both interviews will be posted at jtaylormedia.com, and I plan to advise my radio show listeners of those interviews in my radio show this coming Tuesday. At some point in time, I will take sides on both and make a decision which of these companies that I will be backing, and I will advise my subscribers at that time of my decision. But in any event, I'm very glad that I have Robert Giustra with me today. Thanks for joining me, Robert.
Good to be here, Jay.
It's really an interesting story, interesting to me because I, as I just mentioned, own shares in both and have recommended both companies in my newsletter. Let me just quote a piece of your March 28th press release. You stated the following: "The concerned shareholders are dissatisfied that after more than 21 years under the leadership of the same President and Chief Executive Officer, Eastmain has not made sufficient progress in advancing its projects. The lack of progress is disappointing given the quality of Eastmain's assets. Management of Eastmain continues to enjoy the benefits of its entrenched position, while shareholders have not realized the true potential of their investment." End of quote. Well, tell us where you think and why you think Eastmain has fallen short, and how you think the members that you're proposing to insert into the board could help the shareholders of Eastmain.
Okay, Jay. Well, maybe I should just back up and give a little background. Eastmain came on our radar because we went through a pretty rigorous process to identify companies with interesting assets. That process resulted in us speaking to a handful of shareholders of Eastmain, where the same message was communicated to us over and over again, that the current management of Eastmain is entrenched, that they have great assets in a right jurisdiction, probably at the right time, but that the management team has just not done a satisfactory job of advancing the assets. I think what we're dealing here is a classic example of something that's characteristic of this junior mining industry, and that's entrenchment of management. We have some 1,200 mining companies, Jay, listed on the Venture Exchange, as you know. I think probably 200 to 300 on the Toronto Stock Exchange.
Mm-hmm.
And this is a problem that in the last 5 years, because of the state of the market and the lack of interest in gold equities, nobody really cared. But now we seem to be at the beginning, perhaps, of a new gold cycle, and investors that have Eastmain stock in their portfolio are looking at that investment and thinking, why is this company not advancing its assets? I'll give you a few examples. Don Robinson has been running the company as CEO and chief geologist since at least 1994. That's unheard of in the industry. His wife is Catherine, is the exploration manager. So together they've been running this company for 20 years plus. During that period, they've spent over $44 million on their flagship asset, the Eau Claire deposit, which forms part of their Clearwater project, have completed 7 resource estimates, but not one economic study. The deposit has 1.6 million ounces, grading 4 grams. It has 1 million ounces in open pit. It looks encouraging from the publicly available information. But it begs the question, why is it not in production? They have been working on this project, Eastmain directly, since the 1990s. The project has been known since the 1970s, and it's still not in production, and not one economic study has been completed on it. Just in the last 5 years, Eastmain has spent $30 million at Clearwater and has still not produced an economic study. In addition to that, the number of ounces in 2015 compared to 2011 is actually less. The number of ounces after $30 million in spending has actually gone down. During the same 5-year period, the CEO and his wife, the exploration manager, have been averaging about $430,000 a year in salaries and fees. Over the course of their management since mid-1990s, they've collected a combined $5.3 million in salaries and fees. So the great frustration by the shareholders is, why is this project not producing? In addition, when you look at some of the other assets, why are these projects not being advanced? In particular, they have the Eleanor South joint venture with Goldcorp, of which they're the operator, in what is perhaps the hottest area today for gold exploration on the planet, and there's just nothing going on. So I think what we're dealing with, Jay, is the frustrations expressed to me by all the shareholders that have contacted us since our press release has gone out to express frustration, or whom I've had a dialogue with going back some weeks, don't think that the current management can advance this project in a way that it deserves.
All right. You are proposing 5 board members to be inserted onto the Eastmain board, essentially changing the management of Eastmain. Could you perhaps give a little bit of background give us a little bit of information in terms of their background and why you think that board could do a better job of advancing Eastmain?
Well, I think the bottom line, Jay, is what the current board of Eastmain lacks is capital markets experience. Mm-hmm. And the way to unlock value, one of the ways to unlock value on Eastmain's assets is to take advantage of that experience that our proposed board has in order to open a process. We have a lot of industry contacts. The combined experience of the proposed board spans dozens and dozens of transactions with most of the major mining companies, the names that you're aware of, dozens of joint ventures, and hundreds of millions of dollars raised for projects. But most importantly, we have experience at advancing assets very quickly through exploration and development. To give a couple of examples, the company that I am a CEO of, Columbus Gold, In the same period that Eastmain spent $30 million on their project, Clearwater in Quebec, and has still not produced a PEA. During that same period, in a much more challenging jurisdiction, we took our deposit from 1.9 million ounces to 5 million ounces. We completed a PEA, and we're only months away from completing a full-fledged feasibility study. Other board members have similar experience. Sean Wallace, in particular, has an unprecedented track record in the business, and I think you may know him, Jay.
Yes, I do.
Their company he's a director of now is Sanco. Poured their first gold at their mine in Ghana. They completed construction there ahead of schedule. They're forecast to produce about 190,000 ounces of gold.
All right, Robert, it sounds like you have transactional experience on the proposed board that you're hoping to have asserted into Eastmain, but talk to us a little bit about what you might do differently on the ground. How might you approach this? I mean, with so many different projects that Eastmain has, what might you look to do there that Eastmain hasn't done?
Well, we think the number of their projects in Quebec is part of the opportunity, but essentially, we wouldn't slow things down at Clearwater. We do things a bit differently there. We believe they focused a bit too much on infill drilling, hence the reason their ounces never went up between 2011 and 2015. But there are other targets. We believe that it is possible to increase ounces by testing some of the other targets immediately around the Eau Claire deposit and in other parts of the property. In addition, the Eleanor South JV definitely deserves some attention. It's sort of a bit of definitely deserves some work. It deserves some drilling. We think the Eastmain mine deserves some work as well. In addition, we'll perform a pretty thorough assessment of the other assets and determine where else we could apply some exploration dollars.
All right. Anything else you'd like to add?
No, I think that covers it, Jay.
All right. Very good. Thank you very much, Robert, and look forward to keeping up with this story. It's a fascinating story for me as a shareholder of both companies and also for my subscribers. So thank you very much.
Well, thanks for having me on. Thank you.